Have you ever wondered, how exactly has the United States become such a global tech hub, when most of the apps that we use today come from Silicon Valley and, say, not other countries? Well, today, I'll look to answer that question, as well as any others you may have in your mind at the present. Greetings, everyone, and welcome to Brainspace. My name is Heetaarth, and today we'll be talking about an extremely pressing topic. Keep watching till the end for a special announcement. Recently, I'm sure you may have heard that one of the biggest American banks, the Silicon Valley Development Bank, has crashed. Yes, that's right. The same Silicon Valley which funds many of your favorite social media programs such as Instagram, Facebook, and where you're most likely watching this, YouTube. It's been estimated that the bank had assets and investments into different technology companies worth roughly $212 billion. For reference, that's roughly the same size of the GDP of Libya, Slovenia, Nepal, Bhutan, Myanmar, Uzbekistan, and Tajikistan combined, or roughly 0.000000001% of the US military budget. Anyways, let's run down the history of the SVB. The Silicon Valley Development Bank was founded in 1983 to focus on the need of new and upcoming startups within the United States. Interestingly enough, the bank was founded by two ex-Bank of America managers who decided to found the bank over a game of poker. I guess you could say that SVB got flushed. No? Bad timing? Alright then. When the bank was first founded, it wanted to focus on the fundamental idea of funding new technology startups within the United States, and it structured its loans looking to provide loans to up-and-coming as well as promising startup ventures. The main strategy of the bank was to collect deposits through the startups it was helping to fund through venture capital. What exactly is venture capital? I'm glad you asked. Say that I'm a businessman in Los Angeles, actively looking to support a new banana store that is opening in Los Angeles. The banana store needs extra money to open up, therefore, me, being the rich businessman that I am, can provide money to the owners of the banana store in return for a stake of their company. That is the basic premise of venture capital. Venture capital can also be supplied through technological expertise or managerial expertise. Let's go back to our businessman analogy. Say that I've helped establish an Apple store before. This businessman can use the expertise that he's gained from establishing the Apple store to help establish a banana store. Enough with the fruits, let's get back to the SVB. The bank worked to grow immensely, and gold struck for it during the dot-com bubble, where tons of startups were being established within America. For reference, the dot-com bubble was a stock market bubble which was facilitated by the establishment and release of the internet. With new internet startups and companies being established rapidly, in 1995, the company grew to having almost 2,000 customers, with its most notable being Cisco Systems, today Cisco WebEx. With heavy experience in strong partnerships and relationships with heavy and rich venture capitalists, the company sponsored technology-related trade missions to Mumbai, Bangalore, Tel Aviv, Shanghai, and Beijing to meet with local startup developers as well as local investors and a few government officials to try and paint a picture of the local startup scenes in India, China, and Israel. They later ended up establishing foreign branches within all of these countries. But wait, Heetaarth, if the bank was doing so well from the start, how did it collapse? Well, my dear distinguished viewer, I'm glad you asked. Well, after the events such as the COVID-19 pandemic and the Russo-Ukraine war, many nations have been placed through a lot of economic uncertainty. One of these nations is the United States, which has led to the US Treasury, which is America's sole monetary authority, increasing interest rates to make back some of this lost money. On December 31st, 2022, while we all were out partying, the people of SVB were quaking and shivering in their boots as they had a mark-to-market unrealized loss of $15 billion. With that kind of money, you can make around 340 Eiffel Towers or buy Joe Biden 1 month's supply of ice cream. You might be asking, what does mark-to-market mean? Well, this actively entails that the fair value of a certain product, such as a stock or technology based on price fluctuations over time, to put it in simple terms. Furthermore, there was a combination of many factors that led to the collapse of SVB. Most notably was poor risk management and a bank run by many technology investors, as well as the mass layoffs currently going on within the tech industry. So what does this mean for you and me, the ordinary folks? Well, many of the world's top and leading technology companies were dependent on SVB for financial services. So these technology companies could be late at publishing new goods or the distribution of their new goods as they need to seek new partners for the services Silicon Valley Bank were providing. That's right, your Airbnb, for example, might take longer to process and might take longer to find an apartment for you, or your Amazon package might come a few days later, and you might be having a hard time ordering supplies on Etsy. So what's happened to the bank after collapse? Well, the bank First Citizens Bank shares officially announced their acquisition of the bank, which in less fancy terms means that the bank is now under the First Citizens Group. Before we end today's video, I would like to announce Brainspace's alternate history competition. Submit an entry changing a historical event and its outcomes and win a certificate as well as a shout out in the next video. Link to apply is in the description and applications close by the 11th of April. With that, have a great day, good luck for the competition, and I'll see you all later.